Welcome back, everyone. I hope you're having a great day. And in this episode, we're going to discuss my dividend growth portfolio that now has a value of over $102,000. I'm going to share with you all the stocks that I own, how much dividend income I collect, my recent buys and sells, and how this portfolio performed throughout May 2021. My account is made up of diversified blue chip dividend paying companies, and these are some of the strongest brands in the world. They all generate billions of dollars in cash flow and income every single year, and they return that capital to their shareholders in the form of a growing cash dividend. And the long-term goal for this portfolio is to one day achieve true financial freedom and have the passive dividend income I collect cover all of my monthly expenses so that I would no longer have to work for money and my investments could pay for my lifestyle. And before we take a closer look into my portfolio, I'm going to ask you to please hit that like button and subscribe. I am the Gen Z Investor, and every single day we talk about the stock market, going over different stocks you can buy and any major market news. So please hit that like button, subscribe for the daily videos, and we'll start off this May 2021 portfolio update by taking a look at my Simply Safe Dividends overview. We can see that the exact value of my portfolio as of market close May 28th was $102,640. So I understand we are not completely done May just yet, and there still is one trading session, but I felt now was a great opportunity to do a full monthly recap because I don't have any buys or sells planned for that last day of the month. And right now, my portfolio with a value of over $102,000 provides me with $2,042 of annual dividend income. So no matter what goes on in the market, whether it goes up 20%, down 20%, or it stays flat, my portfolio, if nothing changes with my underlying companies, will provide me with over $2,000 of passive income. And at this current point in time, my yield sits at just below 2%, and I have a yield on cost of 2.48% overall. And I completely understand that for many investors watching, a dividend-focused portfolio with a yield of only 2% is extremely tiny. And a lot of investors don't even think a 2% dividend yield is worth it, especially on a six-figure portfolio. But for me personally, I am still in my early 20s. So I have another 20 to 30 years of investing down the road, so I'm focused on strong dividend growth. I buy the companies who pay out maybe a lower dividend right now, but have the ability to continue to raise it annually for long into the future while also providing me some great share price appreciation. So I have a mixture between long-term capital appreciation and long-term dividend growth as my focus for this portfolio. I have no need to chase high income at this current point in time because I will not be using this dividends to live for another 20 to 30 years. So right now my focus is buying strong companies with healthy financials that I believe will have the cash flow growth in the future to continue to pay out a growing payment. And then over the long term, I believe my yield on cost will continue to grow and my annual dividend income will appreciate at a fast rate. And we can see that my 5-year dividend CAGR is at 8.1%. So if nothing changes with my underlying companies, I can expect going forward that this $2,042 will grow by 8% per year on estimate going forward for the next few years. And of course, if we take a look at my dividend safety, I am a conservative investor. I usually don't take on a lot of risk, and we can see that 93% of my dividend income is likely considered safe, and only 7% is considered borderline. And of that 7%, it's coming from Bank of America and JP Morgan Chase, two companies that I do not believe will cut their dividend anytime soon because both major banks have seen a nice rebound from the 2020 lows, and they've both initiated major share buyback programs for the next few years. So they're in a strong financial position, and I do believe their current dividend will remain stable until they are allowed to increase it. And once that restriction is taken down, I think all of the major banks will provide some nice dividend growth to their shareholders. So I'm not worried about this 7% borderline safe, and I think over the next 2 years, they will go back up to being safe dividend companies. But one thing I want to know is that if you watched my prior update on this portfolio, one large portion of my income is no longer included. And that is because I sold out of my AT&T position after the new merger and the $43 billion deal to sell out of their Warner Media division and create a new service with Discovery. I made a full video outlining my perspective on this deal, but to give you a short recap, I owned 164 shares of AT&T in my portfolio, which provided me over $300 in annual passive income and had a market value of over $5,000. But instead, when I got this news of this merger, it changed the underlying business of AT&T. They were planning a dividend cut, and for many other reasons, I decided to sell out of my entire position in the big telecom company. So I made that sell, I used that excess cash and made different purchases, and I will link the video down below if you want to take a look at my full opinion on this new deal between Warner Media and Discovery. But if we jump back into the May portfolio update, my overall dividend safety since I got rid of AT&T has improved very well, because that made up a large portion of my overall income, and as we can see, that income is now considered unsafe. So I sold out of that position, and my overall dividend safety has now improved dramatically, where 93% of my overall dividends are considered safe over the short and medium term. And if we jump back into the portfolio update, I can show you how much income I'm projected to collect over the next few months. And we can see that over the next 30 days specifically, so throughout June 2021, I'm forecasted to bring in a ton of dividends, and we can see almost every single day I'm getting a dividend paycheck. So many different companies pay out in June, and we can see I have over 10 different stocks providing me with some quarterly cash flow without having to clock in and do any work for the companies. And over the next full year, like we can see my annual projected income at $2,042, and for June 2021, the forecast comes in at $243 overall. So clearly the quarterly payment cycle of March, June, September, and December provide my portfolio with the greatest amount of dividend income. And we can see line by line all the different companies and the expected quarterly payment flowing in over the next year. And now we're going to take a look at how my portfolio performed throughout May 2021. So jumping over to my Excel tracker, we started the month with a total portfolio value of $97,590. And in the month, I collected $171 of passive dividend income. And of course, my portfolio also got some contributions, and I put in $2,500 of my own capital into this portfolio. And like I mentioned at the start of the video, I am still in my early 20s, so this is the funding part of my portfolio growth. This is the point in time where I put in as much capital as possible, and then 10 and 20 years in the future, that's where I will receive the benefits of compound interest. So right now the goal is to put in as much capital as possible, and throughout 2021, I have a set goal of $2,500 per month, and so far in the first 5 months of this year, I have achieved these targets. And continuing on, the actual growth or the gain or loss on the share price appreciation of my companies for the month of May was $2,379, and we finally finished the month with a total value of $102,640 overall. So once again, not a bad month in the portfolio. And we can see we actually went through some nice gains overall compared to the S&P 500, who was actually slightly in the red for the entire month by 0.17%. So I believe my portfolio held up pretty well, and during a month where the market was pretty much flat, we did go through some short-term share price appreciation. And of course, if we continue on, what I believe to be the most important metric of my overall portfolio growth is the long-term passive dividend income. And we started the month at $2,171, and we finished the month at $2,044. So right away, we see a major decrease in my annual passive income for the first time ever. And that is because I sold out of AT&T. It was worth over $5,000 in my portfolio, so it did make up a large portion and was around my fourth largest holding. And in total, that paid out over $300 of passive income that I sold out of and got rid of from my portfolio. And it's hard when you sell out of a company like AT&T, where my yield on cost was over 7%. It's hard to quickly replace that income, and I don't really chase yield, so I couldn't find a company to do just that. So that's where we see the decrease overall in the past month. But now I'm going to show you the specific companies that I bought and sold during the month of May. So we can see a few dividend buys I made were nothing too special. The first one was I picked up 5 shares of Procter & Gamble during a slight dip in share price, and buying these 5 shares added $17.40 to my annual dividend income. And if we continue on, I also bought the dip on Kimberly-Clark, another big consumer company, 5 more shares adding $22 to my annual dividend income as well. And my next 2 purchases were brand new additions to this portfolio. And last week, I made a full video going over each company in full depth and sharing the reasons why I made these buys. And the first new company I added was ticker BLK, which is BlackRock, the largest asset management company in the world, over $9 trillion of assets under management, growing revenue and income every year, and a strong financial company I've been wanting to own for the long term. So I decided to finally start a position and bought 2 shares that added $33 to my annual passive dividend income. And finally, the last buy was Qualcomm, ticker QCOM. I bought 40 shares, bringing in $108 plus to my annual income, and I used a full $5,000 buy to start this position. And that $5,000 came directly from my sale of AT&T stock. So I sold out of a slow growth, high yield company like AT&T and transitioned all of that capital into a semiconductor player with strong future growth potential. They offer a dividend yield right at 2% right now. So of course I did lose around 5+% on the yield difference, but overall I believe Qualcomm will provide a greater total return through share price appreciation and long-term dividend growth, better than what AT&T could provide going forward after the sale of their Warner Media division. And if we continue on, we can of course see that major sell out of the AT&T position, my 164 shares, brought down my overall dividend income by $341. So it did take a big hit because of that sell, but that's only part of the game, and you have to know that it's okay to sell companies when the underlying business has changed and you no longer believe they fit your investing style. And if we continue on, as a dividend growth investor, there's one other factor that impacts my income, and that is natural dividend growth coming from the actual companies. And in the month of May, I got 2 dividend increases. The first one was absolutely major, and that came from Lowe's. I own 18 shares, and they had a 33% increase to their quarterly dividend, which is absolutely phenomenal. This is a dividend king. They've been growing their payment for over 50 consecutive years, and even after such a long dividend streak, they can still afford to grow that payment by a massive 33%, which is absolutely insane. And that's another reason why I love owning this massive home improvement retailer. And the second major purchase and the major increase came from Pepsi. I own 39 shares, and they raised their dividend by 5.1%. And this was the 49th straight time they have increased that dividend payment. So they are 1 year away from becoming a dividend king. So once again, Pepsi is one of the largest positions in my portfolio. I am a very big bull on the company. I love their revenue streams. I love that they have 23 different brands that generate over $1 billion in revenue. And over the long term, I think Pepsi will continue to be a dominant player in the consumer market. So those were the 2 dividend increases I received that added $22 to my forward dividend income. And overall, throughout the month of May, I actually lost $136 of passive income, but I'm not worried about it. I made that decision because of the change in AT&T's business. Going forward, I will get that back up, and maybe by the end of June, my forward dividend income will be back up to where it once was. So overall, that was a quick update on how my portfolio performed throughout May 2021. We saw some nice dividends. I contributed my goal of $2,500, and we saw some nice share price appreciation when actually the overall market was flat for the month. So even though there was actually one more trading session for the month, I'm going to wrap up this update. I want to thank you for watching to the end. My portfolio now sits at a value at $102,640. I want you to please hit that like button, subscribe, and join the community so we can watch this portfolio grow for many years to come, and hopefully one day we can become truly financially free and live off this quarterly passive income. So thank you for watching to the end. Please hit that like button once again and subscribe, and I will see you in tomorrow's video.